Well, hello, everyone, and welcome to your Daily Five. I'm Joe Duarte, founder and editor of Joe Duarte InTheMoneyOptions.com. I'd like to thank you all for spending the next 10 minutes of your valuable time with me and for your continued support. Today, I want to talk to you about my favorite indicator, the advanced decline line. It's the most accurate indicator of the market's trend since the presidential election of 2016, but it has a very long history. So today I'm going to talk about must-know trading facts about the New York Stock Exchange advanced decline line for any market. Now, before we start, as always, I want to make sure that we review our sound trading principles, which are number one, don't fight the Fed, don't fight the market's momentum and the dominant trend on the ground. Stick with strong sectors and stocks. Trade in small lots. That way the volatility in your portfolio is diminished, especially in what could be a very interesting few months as the election nears. And of course, we have to take partial profits every time we get 20% in any stock. You want to keep those sell stops no more than 5 to 8% losses to keep yourself in the game. And of course, you always monitor those lagging sectors for potential turnaround candidates. Well, let's talk about the advanced decline line. It's a tried and true indicator. It's been around for decades, and it actually is very useful. And what I've done with it, as I'll show you in a little bit, is I have modernized it. And what that means is I've added all kinds of interesting additions to it that help us to figure out the market's trend. Nevertheless, it's a simple arithmetic formula. Basically, you can calculate it yourself on paper or in a spreadsheet if you wanted to. You take the number of stocks that are advanced and subtract the number of stocks that decline, and you plot a dot, and then you can make your graph. And it's pretty simple. There's nothing magical to it. Anyone can do it. The best thing about it, though, is that the algos, the trading robots, can't manipulate it. What that means is that they can manipulate the price of stocks. They can mess around with ETFs based on index movements, but they can't change how many stocks go up and how many stocks go down. So what that does is it helps us gauge the market's trend, and it signals us when to enter and exit the market. So here's a few facts. Number one, the advanced decline line is a more accurate indicator of the market's trend than the market indexes because the algos can't manipulate the market's breadth, as I just told you. Second, by applying technical indicators to the advanced decline line, you get much better information about what the market is going to do. I'll show you that in the next few slides. But first, consider the fact that no major correction in the market has happened since 1987 without a significant divergence in the advanced decline line. What that means is that if there was a nearly perfect indicator to predict when markets are going to fall and when markets are going to rise meaningfully, you're looking at the advanced decline line. So I have developed a rule called Duarte's 50-50 rule. And I've mentioned this before, but it's important to keep an eye on it. We'll talk about it as we go along here. So let's look at our big slide like we always do. Talk about the complexity zone, which is when the market is acting well. You can see that the advanced decline line is moving nicely higher when it's in the complexity zone. You look at the chaos zone where the market just goes all wrong, and the advanced decline line falls into the chaos zone. Bad things happen to your stocks. Let's talk about the edge of chaos. That's the area where chaos, where things go crazy, and where complexity, where things work out just right, are in just the right mix to propel stocks higher. And we have two edges of chaos that we want to talk about. Number one is the blue line here, the 50-day moving average. And number two is the red line here, the 200-day moving average. Now we look back all the way to 2018, we see that during this January, February 2018 area, the advanced decline line fell below that 50-day moving average. And you know, it was a little bit of a downslide, but not very much. We saw that again here, not very much. The uptrend remained intact. However, we move over to October, you see that break below that 50-day moving average gathered steam and then went down to the 200-day moving average. Finally, it broke below there, and the market took a big hit. Now, here's what's important. Let's talk about those indicators. When the RSI, which we look down here, breaks below 50, okay, the odds of the market falling rise significantly. Didn't see so much here in 2018 and early 2019, but we did see a lot of problems here when that RSI broke below 50 later on in 2019. Most recently, again, that 50-50 rule, we saw that happen here in early 2020, break below the 50-day moving average, break below that 50 RSI, and we had a significant decline. But the 200-day moving average held up, the market rebounded. So what we want to do is not just look at the trend, but also keep an eye on those moving averages. Make sure that the advanced decline line stays in the complexity zone. When that happens, what we know is that we should be trying to go long stocks. So what's happening currently, just as an illustration, here we are in September 2020 with the election nearing. We see that the advanced decline line is having a great deal of volatility. We also see that that 50 area on the RSI has held up. And we also see that momentum is actually trying to rebound. So the market's trying to make a decision. So bottom line is the advanced decline line is a great predictor of the market's trend. And by adding specific technical indicators, you're able to get a much clearer picture of what's going on. Now, how do we make even better use of this advanced decline line? Well, you should use it in concert with major indices in order to confirm the presence of divergences in the market. Remember, the indices are secondary, but they can still be useful. So let's look at a particular situation with an individual stock, which works just as well as an index. We look at the advanced decline line. We see here that this is DR Horton, a stock that had a great run in 2020 as people are leaving major cities and home builders are building houses. So advanced decline line has made a very, very nice higher high. You see that DR Horton made another higher high here, but you can see that RSI made a lower high, which is telling you that the market is losing momentum. So you need to be very careful. You can see that the advanced decline line broke below that 50-day moving average, and RSI eventually broke below that 50 indicator level, and we saw a decline in the advanced decline line, and we saw a major decline in DR Horton. Same thing, we saw RSI was oversold, DR Horton started bouncing, advanced decline started moving higher, and here we go again with the uptrend. Again, notice that the 50-day moving average and the 200-day moving averages are key in helping us with the trend. Of course, we have the golden cross here, which in this case proved to be an exceptionally good predictor of what was coming up next. Of course, golden cross is when the 50 crosses above the 200-day. So as we move a little further later in the year, what we see here is, again, the potential for a divergence. Lower highs on the advanced decline line, a great deal of resistance here. And we see a DR Horton, and you can use that as a proxy for the S&P 500, is moving lower and struggling as well. Again, you see that RSI, although has not broken below 50, certainly having trouble getting above that falling trend line. Number 4, as I just showed, the leading stocks, DR Horton. Now, I want to make sure that we recap this in some detail. The key to the whole thing is that number 1, watch the major trend of the advanced decline line. Number 2, watch the 50-day moving average, and you watch the 200-day moving average. You can also match the S&P 500, the NASDAQ 100, your favorite index, or any stock that you're doing right now. The key is that you want to see your stock moving along with the advanced decline line and confirming that general trend. That's all I have for today. I want to thank you very much for being here with me. I'm Joe Duarte. Thank you for watching. Please check out my best-selling book, Trading Options for Dummies, and consider a free trial to my website, Joe Duarte, in themoneyoptions.com. We'll talk again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.